Three questions we're asking today from our global perspective. Markets have been pretty rocky this year, but institutional interest in crypto is on the rise. What does that mean for investors about the future? What do they know? What are the opportunities and where? And what's so attractive about Australia right now? Well, let's get you up to speed from Asia to the world.
Join thousands of NFT traders who already start their day on CryptoSlam.
The crypto winter may have frozen some investors to the bone. However, confidence seems to be on the rise in the institutional space. BlackRock inked a deal with Coinbase just last week, offering crypto access to institutional customers. So why are these moves happening still? And what can we learn from them? Forkast's Carolyn Wright reports.
Some crypto critics claim the end was nigh as prices crashed earlier this year. However, Feroz Madeira of crypto exchange Gemini told Forkast there's something very important to bear in mind when reading such doom-laden headlines.
This particular crypto winter is unprecedented in the sense that 2020 to 2021 has seen perhaps the biggest percentage and absolute growth in the cryptocurrency space in terms of retail adoption. So unfortunately, this particular crypto winter has a much wider impact on a large number of people who are relatively newer to the cryptocurrency market, because unfortunately it is still a very young and growing industry. So we've seen previous winters in 2017 and even much earlier on in 2009-10, but that was probably not in the public consciousness because the cryptocurrency market was not as much in the public consciousness as it is now.
Not only that, massive traditional names like BlackRock are striding forward on crypto. Last week's deal with Coinbase was followed by the announcement of a spot Bitcoin private trust on Thursday. So what message is that sending about the health of the market? Justin Denethan of Amber told Forkast that such moves wouldn't be made if there wasn't demand.
This is super supportive for the crypto space because first, they wouldn't do it if there was not interest, from those clients to get allocated to the asset. And actually, they said, even with prices being lower, even with the pullback we've seen in risk assets, we still get a lot of interest from institutional investors to allocate into the space.
Denethan says BlackRock will be in a good position to offer exposure to crypto when the next bull run comes as a result, and that these moves form part of a trend. He expects a lot more to come and says investors should feel confident in the asset class as a result.
I think it's really the narrative you're hearing a lot in the crypto space right now, which is when you're in a bear market, it's time to build as opposed to just the trading or the hodling. It's really about building the right infrastructure. And I think BlackRock is kind of preparing itself as a traditional player getting into the crypto space. Yeah. And so I suspect that in the coming future, and I don't know on what timeline that is, you will see other, fund providers or large asset managers offering investment instruments or vehicles to their different investors, and so that just means more and more capital into the crypto space.
Investment manager Whole On Global Investments, which partnered with Gemini as custodian for 3 retail crypto funds it launched in July, told Forkast that the key for all investors is understanding what they are getting into.
For retail investors, I think that it's one of those things that needs to be very considered with regard to their risk profile and how they think about an allocation and the adoption. We advocate to people that it own, should be a small proportion of a portfolio in consideration of how they think about risk. But would also encourage people to really start thinking about doing the work in understanding what the digital asset actually is and what is enabled by the technology underpinning the digital asset. So I really encourage people to separate the volatility of the actual asset and the use case which can be driven by the underlying technology. Once you can understand the underlying technology or the use cases of that technology, then understanding where you think it's something that's worth taking a position in rather than necessarily just saying, well, I think it's going up, therefore I should take a position.
Feroz Madeira of Gemini says we can also learn from the hurdles such big names will have had to overcome to offer crypto-related products.
So the interest from the institutional perspective is bringing a long-term growth trend to the cryptocurrency industry and to the adoption of blockchain technology as well. I would say for most institutions, their requirements and operational needs for entering a new space, or the cryptocurrency space for that matter, has a lot more requirements and barriers to entry than the average institutional investor. They would need the same robust regulatory framework, as well as systems and operations that can support operations at scale. And it's not a decision that they would enter into on a whim and a fancy. It's a long-term decision and a high commitment on their part, and I think it is going to be excellent for the industry to see more institutional adoption.
Jeff Yu of Australia's Monochrome Digital Asset Management agrees that BlackRock will have put a lot of thought behind their move.
It appears that BlackRock has been contemplating this move for a considerable amount of time, which is prudent and the responsible thing to do. To integrate something radically new like Bitcoin into an established traditional business is a process not to be rushed.
While BlackRock's fund is focused on a US market, both Holon and Gemini told Forkast that Australia is a very attractive option from a regulatory perspective.
One of the great strengths that Australia has is, from a regulatory perspective, is a very consultative approach that the regulator has with all the cryptocurrency institutions. Rather than making rules in a vacuum, there's a very open and engaged regulator that's looking to have a two-way discourse. So that feedback loop has created the environment that's very well regulated and very welcoming for the industry. And we think a global regulated framework for cryptocurrency is going to be a significant positive growth for crypto in general.
Rory Scott of Holon sees potential for more development to come in the country.
Australia is one of those obvious places for financial services types businesses to come to the business, because we've got a large pool of savings assets as a result of the superannuation environment, and that's growing at a mandated 10% per annum. So, it's an attractive place for anybody to do business. If you couple that with the fact that it's likely that we'll get regulation sooner rather than later around digital assets, and becomes clearer for how people can participate in the market from an institutional standpoint.
Getting back to what we might see next, Madeira of Gemini says the range of investment opportunities available from institutions is likely to widen.
The cryptocurrency space now offers a lot more diverse opportunities than it did a mere 3-4 years ago. I would say in 2017, the level of activity in the DeFi space was far lower than it is now. I don't think anyone would have been particularly aware of non-fungible tokens back then. And we've also seen much more institutions offering different types of services. So people are offering technology solutions, investment opportunities, or they're also partnering up in direct investment in sponsoring tokens or sponsoring technology development in Web3. So I'd say the space is opening up lots more nuanced opportunities for participation beyond just buying Bitcoin.
Seems institutional interest is opening up a whole new range of investment options in the world of digital assets. I'm Carolyn Wright, Forkast.
You know it's getting real when even the big institutional traditional banks make the leap. Will gamers and younger generations lead us into the metaverse and all the endless possibilities? How would companies go about making their presence felt in this new digital future? And what could be the fallout from living this alternate reality? Well, that's the focus of the latest edition of Word on the Block. I sat down with Lam Chi Kin, head of legal and compliance for DBS Group, and also a veteran gamer, to discuss all of this and more.
Actually, the way that the laws of the regulations that apply to the digital world will intersect with the regulations of the physical world, that's also blowing my mind. That, I think, is something that we have to get much better at. And let me just give you a very simple example of this. You've got an NFT, okay? And let's say in the real world you get divorced. is the NFT part of your matrimonial asset or not? Or if you don't pay your taxes, can the taxman take the NFT and sell it and then use the proceeds for taxes? Or let's say you end up in a litigation dispute and that person tries to garnish your assets. I think all these questions do bear thinking around, because you don't want to have to answer these questions when the incident actually happens to you.
Make sure you catch the entire interview, and that is out on Monday. And finally, excited to tell you about one of the most important crypto conversations on the future of regulations. It's less than 2 weeks away. Forkast's next Crypto Rising live stream event happens August 26th in Asia, August 25th in the US, and that's when some of crypto's most influential figures across Asia will be sitting down with me and Sean Lee from the Crypto Council for Innovation to discuss navigating the new regulatory landscape. You don't want to miss out. Sign up at Forkast.News and make sure to join us on that day. That's 9 a.m. August 26th, Hong Kong time, 9 p.m. on the 25th Eastern time. And that's your Daily Forkast from Asia to the world. Follow us on Twitter for the latest updates at Forkast_news. Head to our website as well for more details on all of today's stories and more. I'm Forkast Editor-in-Chief Angie Lau. Until the next time.